Assalamualaikum and good morning. I hope you enjoy today. And first of all, I'd like to introduce myself and put me Amin. And I would like to answer this question. This is question from UITM question, February 2022, FAR320 or other institution we call advanced counting or financial accounting 5, more focusing on the consolidated financial statements. This is a financial positions. Okay, we have two questions, question 1 and also question 5 related to the consolidated. And for question 1 is mainly for financial position. Look at the questions. Question 1, this is a financial position and also the additional information, and what we require is statement of financial positions, whereby for question number 5 only financial statement on the income statement. This is for a financial position, is formerly known as balance sheet. So we have look at the question, Lana and Lini. Lana and Lini, I will use my Samsung Notes for I'm trying to solve this question by using the digital pen at Samsung Notes in my tab here. So Lana acquired shares and debentures in Lini. So Lana is considered our holding and Lini is our subsidiary. Lana and Lini, for example, this is Lana. Lana and company of Lana is Lini. Lana acquired or Lana purchased Lini and by acquired shares and debentures in Lini. So when you want to calculate the how much or how big the shares from Lana in Lini or acquired shares, or what the percentage, we have to calculate, consider the shares only or ordinary share, whereby the debentures is considered our liability. So liability is not considered as ownership. So for the sake of ordinary or ownership is ordinary share. Ownership only. So Lana acquired shares and debentures on Lini on 1st of January. 1st of 2019. On that date, the balance in general reserve and retained profit So basically, the general reserve and retained profit is for Lini or the subsidiary. Were 80,000 and 50,000 respectively. Below are the statement of financial positions for Lana and Lini. Consider this: Lana is holding the company or parent, and Lini is subsidiary. It's subsidiary for Lana because of Lana acquired shares of Lini. So this is so you have to remember, this is position, the financial position or balance sheet. Of asset, liability, and equity for Lana and Lini. For asset and land building, for asset, land and building, plant machinery for Lana and Lini here. And investment in Lini Berhad. $960,000 ordinary share OS. This is very important. Where Lana have or already acquired of 960,000 ordinary shares, and this is preference shares, and also this debentures. Debentures is like our Lana liabilities. It's not considered ownership. So ownership is for this purpose ordinary shares. And also the inventories, accounts receivable, bill receivables and bank. This is current asset, and equities and liabilities. Ordinary shares is total of this is investment of Lini, and this is the total of equity 2 million, and for Lini 600,000 preference shares, general reserve and retained profits. And the shares for Lana is always higher than Lini, 2,600,000, and the benches. This is the amounts of asset, equities, and risk for both company Lana and Lini. And this is shares the additional information. So you have to you need to consider all the information or adjustment that need required by to what call to console between holdings and subsidiary. This is Lini of shares and debentures of Lini. on the date of acquisitions, 1st of January 2019. This is a unit of 1,200,000 and the value is 600,000 ringgit. So this is what we call how to get 600,000. This is 200,000 times 0.5 ringgit or 50 cents. Then you will get 600 ringgit, equivalent to 600,000 ringgit. And next, 400,000 preference shares. So we have ordinary shares, preference shares. So reminds you what is the preference shares. Preference shares is the shares we offer to, it's not to the public, it's only to our preference or priority to, for example, of a linear owner or top management, and also the senior staff, to recognize their experience or also their contribution to the company. So the shares actually is open to the public. That's why when we want to know or to identify the ownership, then we just only consider only shares amounts and amounts. And then next is on the 1st of January 2020, linear purchase machines. So this is you want to calculate the depreciation, or whether we over depreciate or under depreciate because of linear purchase a machine from Lana for 500,000, which is the carrying amount is 460,000, and linear purchase 500,000 more than the carrying amount. Then you can see the profit arises from these transactions. And both company depreciate plant and machinery at 20% per annum on reducing balance methods. So they use reducing balance method, where every year for that year we have to calculate the carrying value after depreciations on the value of cumulative depreciations, then straight away times by 20%. I mean, you can get the depreciation figure. And then number 3, during the year 2020, Lana will have an invoice inventory to Lini at the gross margin of 10%. So Lana invoice, what do you mean? What does it mean, invoice? Invoice meaning is Lana sold its inventory. So Lana have inventory, and Lana and Lini in the same industry. Maybe Lini can use the inventory made or owned by Lana, and that's why Lana sold its inventory to Lini, and Lana get a profit margin of 40%. This is what we call intercompany. So number 2 and number 3 is we consider the intercompany. Then what the adjustment we need, that's because we need to console all these things, At the end of the counting year, 40,000 worth of this good are still remain closing inventory. So closing inventory is considered our current assets amounting 40,000. This is direct answers. And then how to, when it comes to consoles, then this can be considered, will be considered of closing inventory. And number 4, the directors of both companies have decided to declare preference dividend for the year ended. No records have been made for both companies. So this is so what is the figure? What the percent of preference dividend is 10% every year. Every year, the preference dividend, the owner or holder of the preference shares must get 10% dividend every year. This is you have to remember this 10% dividends. Then this debenture interest not yet being provided or not yet being recorded. Bill payable of Lini Berhad were in favor of Lana Berhad. Lana bill payable of Lini Berhad were in favor of Lana. Lana Berhad has discounted 10,000 of the bills. Bills payable here, a part of 80,000 or in the 80,000, a part of 80,000 is 10,000. Bill payable here is payable to actually to Lana. So Lini owed or not paid yet the bill payable, the bills to Lana. And Lana has discounted 10,000 of the bills, and from the bills, Lana give discount 10,000. The bill is not yet paid. The non-controlling interest, so this is NCI, is measured at the proportions of fair value of net asset of Lini on date of acquisition. That's why I will show the table of fair value of net assets here, and we also need to calculate the goodwill is impact. What is impact actually? Impact is referred to Professor Halim. Impact is rosok nilai. So the asset is, the nilai is undervalued or decline by 40,000. For example, impact. For example, company have a set of vehicle, for example lorry, and the lorry after the depreciations and carrying value of 50,000, then we appoint another parties to revalue, or you can see the market value is, instead of 50,000, and then actually that asset impact declined by 40,000. 50,000 our calculation, and minus 40,000 impact value. Alright, this is, we also can calculate the goodwill. Okay, next slide is how to consolidated console the financial statement. Okay, now you can see in a part. Alright, we can continue in part